you've ever bought a crypto project that you did all of the research and that project seemed like some project that solved major problems, it's completely new tech, it's going to revolutionize the space, but yet when you invest, the price keeps going down and down and down. Now, this pretty much happens to everybody, but what I'm going to teach you in this video can save you a lot of that trouble, because what I'm going to teach you will let you know on average if your investment is going to go down over time or not. So let's go ahead and dive in and rock this lesson. So let's give a quick example. Celestia, I think, is a very, very good example of what we're going to go over, because Celestia is a very powerful project. It's one of the first real mainstream modular blockchains out there. So this was a project that many people are very bullish on. And the interesting thing is, I know top crypto hedge fund managers that have large positions in Celestia. But if we take a look at Celestia, we check out the price over time. So we're looking at CoinMarketCap. You can see here, since basically the beginning of 2024, Celestia has been going down and down and down and down. So this is a good use case for a technically strong project, or a fundamentally strong project that keeps going down. Now, I obviously, when this Celestia came out, I was thinking on investing in this, but over time, I realized that this was a very risky investment. And all I did to know that is just one simple technical skill. So let's go ahead and bring out the charts so I can show you what that skill is. Okay, one second. Okay, there we go. So right now we have the price chart for Celestia. So what I'm doing here is I am just zooming out on this chart and taking a look at the price history over time. And one of the easiest questions you can ask yourself, that I swear very few people do, is asking yourself, what direction is the price trending? So you can figure this out for yourself. What direction is the price trending? And if you guessed down, you are correct, because you are seeing the price people are willing to sell at is going lower and lower over time. So what is that telling you? All that is simply telling you is that over time, the prices are going down. So what kind of asset are you looking to buy, right? It's typically assets that are going up over time. So let's just contrast this with, say, Bitcoin. Well, what direction is the price of Bitcoin going? Well, the price of Bitcoin over time is going up since 2024. And then TIA, since 2024, is going down over time. It's really that simple. Now, of course, prices can turn around. They eventually do. But the question is, how long are you going to wait? If the price is going down over time, let's just say you're really bullish on Celestia, unfortunately, up here at the top of February in 2024, and you decide to hold until still today. Well, how long would you be holding? So in this example, you'd be holding currently for 602 days, and you'd be down 92%. So you literally need hundreds and hundreds of percentage to gain this back, not just 92%. And you've been holding this for 602 days. That is a lot of pain, guys. That's like super, super brutal to go through. If, and you know, it happens to people, right? But you could easily have found this out by just looking at the price chart to know if this price is downtrending or uptrending. You can see this is the high of the market. The market comes down, makes a lower high, comes down, makes a lower high, comes down, makes still a lower high, comes down, makes a lower high. It keeps making lower highs. That means even when the market is bullish, it cannot even break past the prior high. That's the definition of a downtrend. And you can see how dangerous this can be. Even down here at the lower levels, let me show you this. say you're one of those people that says, okay, I'm just going to buy the dip. Say we're starting in 2025. Say we buy this dip right here. Then the market starts to rally. We get another really nice dip. Market starts to rally. We get another dip. Okay, and then it rallies, and then we're thinking on buying another dip. Well, from your first buy, you're down about 55%. And say you average these out, maybe you're going to get closer to like 25, 30, but still, that is a large loss in your portfolio. Not on, it's a paper loss unless you decided to sell, but you're in a lot of drawdown. In this example, on that first buy, you'd need over 100% gain to make it back. So that's an issue. But still, this was pretty easy to tell, right? If I was looking at this chart at any time in 2025, I would know that the trend is very much a down trend. Okay, that's very important stuff. And we can contrast this with Bitcoin and look at Bitcoin. Say we're doing the same thing as well. Say we're looking in 2025, we're looking to buy, the dips. We buy the dip over here, we buy the dip over here, okay? From the first dip buy, the market is currently up, From the first dip buy, wherever that might be, the market is up 50%, right? Or if we average this out, maybe we're up in general. Nothing is down, even from the second buy, right? That's the cool part. Even from the second buy, it's up 14%-ish. So this is the difference, you guys, is understanding really, do you have the wind at your sails, or are you trying to sail into the wind? That's the whole difference. So no matter how bullish that you believe a project is, if it is trending lower and lower and lower, that is a red flag. That means that people are willing to sell at cheaper prices. When do you ever want to sell anything at a cheaper price? So you buy an investment property and you get an offer for less than you bought it for. When would you sell it at a cheaper price? Well, when you want to get rid of it, you do not believe that the market is going to turn around anytime soon. That's when you'd sell it for a lower price. And then when would you do the opposite? When would you buy at higher prices? When would you say, okay, I know that whatever it is, I bought a Lamborghini Cullinan. I'm sorry, a Rolls-Royce Cullinan. And I see that the prices of Cullinans keep going up. I bought one for whatever, $350,000. Now there's another one for sale for $400,000, but I believe that it's going to become $500,000. Maybe I should buy one at $400,000, even though it's higher than the last one I bought. I know these are crazy examples, but this is the way that you have to think of things. If the market is willing to buy at higher prices, they believe that the market is going to continue to rise. That's just the principle. And to the opposite, if the market is selling at lower prices, say Bitcoin starts to trend lower, right, and actually create that downtrend, the market is now saying that they want to get out and they're willing to sell at even lower prices to get out. So hopefully this was helpful. The main takeaway that you need to have here to understand this principle is to look at the trend. If you're looking to hold a cryptocurrency over weeks or months, you might want to look at a higher time frame like the weekly or the monthly chart or the daily chart, so you can understand, is the wind at your back for that position, or is it into your sail? Is it a headwind like Tia? All right, so hopefully that was super helpful. If you can understand this, this could very well radically change your trading and investing game. So I hope that helps. Let me know anything in the comments, and I'll see you on the next lesson.